Hello, everyone. Thank you so much for joining today. So I want to do a check to make sure. Can everyone hear me and see me? Let me know if you can hear me and see me. Okay, good. So volume sounds good and everyone can hear me. Okay, good. So today we're going to discuss 10 overlooked tax deductions for small businesses. Now, I know I said 7 in the visual, but I was thinking, why not give you even more so that you can save more money in your business? Now, the goal of a business owner is to pay the lowest amount legally possible in taxes, right? And it is estimated that taxpayers are overpaying in taxes by $1 billion. Yes, you heard me correctly, $1 billion. This is because for business owners specifically, they are often not aware of the tax loopholes that they can use to their advantage. Well, today is your lucky day. As you gear up to prepare for taxes, I want to provide you with, again, 10 overlooked tax deductions for small businesses. Now, before we jump into today's content, let me introduce myself. I am 𝐤𝐨𝐬𝐤, the CEO of Say Yes to Profits. I am the virtual CFO for consultants, and I help consultants who desire to have more money, more profits, and pay less taxes in their business. So here's the thing. We are right now streaming live on YouTube, on LinkedIn, and on the Say Yes to Profits Facebook group. So be sure to share this video right now, share away, like the video, and if you're on YouTube, make sure that you click and subscribe. Also, if you have questions as I deep dive into today's content, you can place your questions in the comments area and I can answer your questions live right here on the video. And I will also come back after we're done and answer any questions that are left, okay? So a couple of things, a disclaimer, this video, because we're talking about taxes, it's for informational purposes only, all right? Tax deductions, tax rules, tax regulations, they change by the blink of an eye. So you want to make sure that you refer to the IRS website and your tax advisor. But this is for informational purposes only, but it can help you, okay? The next thing, I have a free resource that goes along with today's video. It'll complement today's video. It is a checklist. It's going to provide additional strategies as you see here on the screen. And then it's also going to help you prepare for a tax-free or stress-free rather tax time. So click the link in the description and download this checklist because again, it's going to help you, right? So my question to you is, do you want to keep more money in your business or do you want to give the money to the IRS? Do you want to keep more money in your business or do you want to give your money to the IRS? I don't even have to look at the comments to know your answer to this question. So I'm going to go ahead and jump into today's content. Now I have a lot to give you. So this is the video that you want to bookmark, that you want to come back to, and you want to watch it a couple of times because I am going to deep dive as much as I can in the time that we are allowed, the 10 most overlooked tax deductions that is going to help you keep more money in your business and beat the IRS at the tax game, okay? So first things first, the first tax deduction that you want to make sure that you're taking part in is contributing to your retirement, okay? So when I talk about contributing to your retirement, the tax benefits of a retirement plan is that your contributions are generally made with pre-tax dollars, all right? This basically means you don't pay taxes until you withdraw the funds that you contributed to your retirement plan. When you use pre-tax dollars to fund your retirement account, the IRS allows you to reduce your taxable income by that amount. All right. So your taxable income is reduced when you contribute to your retirement account. Basically, you can write off your contributions made to a qualified retirement account, such as a SEP, an IRA, a 401k, or a solo 401k. Now, as a business owner, you can open a SEP, which is a simplified employment pension, or a solo 401k. Now, there are other qualified retirement plans. I'm going to deep dive a little bit into those two. And then for additional information on the other ones, you can check out our website. With a SEP, you can contribute as much as 25% of your net earnings for self-employment, which is up to $57,000 for 2020 and $58,000 for 2021. And guess what? The deadline to establish a SEP is April 15th. So this is something you can implement right now. All right. With a solo 401k, this is a retirement plan to cover business owners who currently do not have employees. The great thing about a solo 401k is that you can contribute from both the owner and the business. All right. You can contribute $19,500 in 2020 or $26,000 if you're over the age of 50 for 2020. For 2021, the contribution limits have increased to $58,000 or $64,000 if you're over the age of 50. When you think about your retirement contributions and using that as a tax write-off, you have to factor in a couple of things. You have to factor in your retirement account. You have to factor in the contribution limits and the income limits to determine the best tax strategy. But this is definitely something all business owners should look into, okay? Number 2, startup costs. Startup costs and organization costs. Now, any costs needed to establish your business can be written off. So for example, to start your business, maybe you hire an accountant, which you should do. Maybe you hire an attorney. Maybe you enroll in a training program or you spent money on marketing. The cost you incurred before starting your business is considered startup and organization costs. Now, as of the date of this video, you can write off up to $5,000 in the first year of startup costs and organization costs for your business, up to $5,000. So again, this is another tax deduction that you want to make sure that you're paying close attention to, especially if you just started your business. All right. Number 3, the home office deduction. This is, for most businesses, the biggest tax write-off, okay? As a business owner, you need to have a dedicated physical office space in your home that is used exclusively on a regular basis as your principal place of business. When you have that in place, you can take this tax write-off. You can use the simplified IRS method, or you can use the square foot method. So let me go into those a little bit. With the square foot method, you want to measure the size of your office and divide the square foot by the total square foot of your home. You will then use that number to determine the percentage of expenses that you can write off because you have a home office. You can take that number and write off a percentage of your mortgage, your rent, your utilities, your cleaning, even your repairs. All right. Now, with the IRS simplified method, you're going to multiply the square foot of your home office by $5. With the simplified method, there's a cap, and the cap is 300 square foot, and the minimum is $1,500. So there's a cap with the IRS simplified method, but you definitely want to make sure that you take a look at those. Okay, got it, Alexis. So number 4 is, and I'm going to try to go through these pretty quickly to not keep you all on here for a long time, but number 4 is, let's put that one up. Cell phone services and cell phone. Guess what? you can actually write off your portion of your cell phone bill that you use for business. Okay. You can also write off the purchase of your cell phone as a business expense. Here's the thing, be crystal clear on the purpose of using your cell phone and the portion that is used for your business. All right. So you want to make sure you're crystal clear on that, but you definitely can use that as a write-off. Now we're going to get into some of the more advanced ones. So pay close attention. The next is labor costs. You can and should deduct all costs related to anyone working in your business. This includes both your employees and contractors. Now, here's the thing. You want to make sure you onboard them correctly. So for employees, you want to have a completed W-4 form on file. And for contractors, you want to have a completed W-9 form on file. You want to have them complete those forms when they're starting with your company, and you want to use those as tax write-offs. Number 6, I absolutely love number 6. I use this in my business. You want to hire your kids to work for you. When you hire your kids to work for you, you can pay them $12,000 and use it as a tax write-off as of the date of this video. Now, if you've been following me for some time, you know I joke a lot about my kids. I say it all the time. I have the starting 5 of a football team. Yes, I have 5 kids. And I use them little write-offs in my business. My daughter works for me right now, and all of them going to work for me at some point. But I can pay them, and you can too, up to $12,000 for the year and write that off. And guess what? Your child will not have to pay federal income taxes on that money. So this is definitely a tax write-off that you should use. All right. So moving right along to the next one, business mileage. You can deduct every single mile you drive for your business purposes. The key is to keep a mileage log that clearly identifies the to, from, and the purpose for each trip. All right. Now for 2020, the standard mileage rate is 56.5 cents. And for 2021, it's 56 cents, okay? If you are a self-employed business owner, you use your car solely for business, you can decide on if you want to write off the vehicle's actual expenses or use the IRS standard mileage rate. You have a decision to make if the car is solely used for business. But here's the thing, do not write off any mileage for personal reasons. Do not do that. All right. So moving right along. Number 9, health savings account. This is an actual write-off. Oh, let me put that one up. Let's see. Where is my health savings account? Okay, there we go. Okay. Health savings account. This is an actual write-off that a lot of business owners, they don't use for whatever reasons. You can establish a health savings plan for you and your employees and deduct contributions you make to your employees' HSA as a business expense. In addition, the employees that contribute to their HSA is not subject to federal income tax. So guess what? This is a win-win-win for everyone, okay? So let me go back because I just realized I missed one, and it is business interest expense. This is another most overlooked tax deductions because if your business has loans or debt, you can write off the interest charged to you to have that debt or loan. Listen, let me be crystal clear here. You cannot write off the principal payments made to that loan or debt. You cannot. But what you can do is write off the entire portion the bank earns, which is more than likely the interest expense. This is a huge and overlooked tax deduction. Okay. Moving right along to the last one. Self-employment tax savings. If you own a business that is earning more than $40,000 in net income, you can save on self-employment taxes by converting your business to an LLC taxed as an S corporation. All right. As an S corporation, the business becomes a pass-through entity, and the shareholders of the entity are taxed based on their ownership percentage. Now, the key here is that as the owner of the company, you must pay yourself a reasonable salary. That's the key. If you want help in determining your reasonable salary, I have a video on my YouTube channel titled How to Correctly Pay Yourself as an LLC or S Corporation. Take a look at that video because I deep dive into how to pay yourself a reasonable salary if you are an S Corp. Okay? So, final thoughts. You want to make sure that you are crystal clear on the tax write-offs that you have as a business owner, because that will save you more money. You did not work all this time to pay the IRS 5 and 6 figures in taxes. However, in order to implement the tax saving strategies, you want to make sure that you have an accurate, reliable accounting system in place in your business. Now, of course, if you need help with establishing an accounting system and shifting to an S corporation, we definitely can help you here at Say Yes to Profits. The deadline to change to an S corporation is March 15th, but it is never too late to begin to build and maintain a solid financial management system for your business. That is definitely something you want to do. All right. If you have any questions or comments, definitely leave your questions and comments below. Also, do not forget to download the tax form checklist. You can click the link in the description to access that as well. This is 𝐤𝐤𝐤𝐞. Thank you for joining me today for this live video. We'll be back again quite soon for another live video as well. So make sure that you stay tuned. You like this video, you share this video, and you subscribe to our YouTube channel. Until next time, say yes to profits. Toodles.